Hello guys, this is Trade of the Day. Today I'll be going over today's trade that I made on Thursday, March 16, 2017. As a reminder, this video is for learning purposes only. Okay guys, so today I'm going to go over my Tesla trade that I made. I'm going to kind of explain to you a little bit more about this setup, kind of more about the fundamentals, like the news behind it, what's really going on sometimes in these setups, and why do these things happen, and also a little bit more about the Fed. Because of the Fed, I had to unfortunately sell a little bit early, and I'll explain why. So this is a gap down reversal type of play. Tesla reported earnings on February 22nd, and the market did not like it. So there was huge sell-offs. And on this day, February 24th, Goldman Sachs downgraded Tesla, stating that they were going to have short-term obstacles and problems related to cash flow because of all the money it's invested on plan to build a Model 3, et cetera, et cetera. So of course the market didn't like it. Huge gap down, straight to support. So when I saw that huge gap down, that exhaustion gas type of gap down where pretty much all sellers are out, straight to support area, by the way, the 50-day and this price support at 240, that gave me an alert. Hey, I think this is a good time to get in. There's a huge good reward to risk ratio type of here. Buy around the 240 area, put stop below that. I did put my stop at 238, and then you have all these area for reward possibilities. So that's what I did. So I did get in on this day 227, and it held. So of course, these type of setups are hard to predict. See what happens. Sometimes they just bounce up and they go straight up, or sometimes they consolidate, and they did consolidate here, and it kind of went below the 50, but it still had that 240 support. So again, you gotta set your stops and you gotta let it ride. You cannot sell early, even if it looks like it's kind of reversing, because you never know what could happen, and you gotta keep yourself this way because you will lose in a lot of opportunities. And I'm glad I kind of held this through this because some trader will just sell. But great news, there was some news. There was a catalyst. On this day, on March 14th, there was talk that Elon Musk was talking to some people in South Australia that he was promising to help their electricity needs. And if for whatever reason doesn't work, it was going to be for free or something like that. He tweeted it. So definitely welcome you guys to look at it on Twitter if you guys want to kind of look more about that tweet. But that in itself, it was a huge PR news announcement because that kind of showed that Tesla was working with South Australia and possibly a big contract, with big money coming in. So that was huge news. So there was a reversal, right away, huge reversal. I really think a lot of short sellers are covering, because they were bearish because of of course, the downgrade. So of course, this huge short sellers covering creates this huge massive, pop. Again, well, after this pop, of course, it was close to my target area, and I actually missed my target area by $1 on March 15. And unfortunately, I had to sell early in March 15 because of the Federal Reserve. And the thing about the Federal Reserve, it's almost like an earning announcement. You never know what could happen. It could be, even if it's positive news, the market could react negative. So it's all about how the market reacts to it. And it's very hard to predict. And unless you're hedged, which some traders usually are hedged during these type of announcements, you should get out. And that's the reason when I got out personally. And just to show you how important that is, if you look at the SPY chart, this is the intraday chart. The Federal Reserve made their announcement about interest rates at 1 p.m. Central Time. So if you see this huge candle, intraday, over 3 million shares bought or traded, and these things could be reversed. Now, in this case, it was good news. The market liked it, and it went up, and it bounced up, and the stock continued. Stocks continued, but sometimes it's the opposite. And it's you never know. It's like a 50-50. So with these type of setups, you cannot predict it. So you're better off, if you're not hedged, take off your position. So that's what happened with me on Tesla. I did take it off, and after I saw the positive news on the Federal Reserve, I thought about getting back in, but I was like, you know what? I've already made like a 1-to-1. Do I want to risk one to make one again? I don't know if I want to do that. So I was like, you know what? I'm just gonna take my money and that's it. Call it a day. The crazy thing, there was more PR news on Tesla. Today, they announced that they were raising $1 billion in I guess in convertible bonds, combined with common stock, and I think it was $250 million in secondary offering common stock, and then the rest, 750 million in convertible bonds. So huge, good announcement. As a reminder, remember when I talked about earlier the downgrade? Again, there was a downgrade because Goldman Sachs believed they were going to have short-term problems. Unless they fix that, there was probably going to be a downtrend. So one, there was a PR news with the whole possibility contract with South Australia, and two, they're raising $1 billion in cash. So boom, all of the, I guess, short-term problems solved, I guess you could say. Usually, a lot of stocks actually sell off during secondary offerings, but in this case, it's different because you already knew that they needed one in order to continue your business. But knowing that there's a huge, I guess, potential in terms of the Model 3, in terms of bringing in revenue to Tesla, and knowing that this revenue is going to help that get that return on investment, that's the reason why Tesla moved in this way. So hopefully you guys learned something from this trade. I know it sounds complicated, something that the more you do this, the more you learn, and you start catching these little things, these little news announcements, and how these news announcements affect the stock. And then you combine that with the support levels, like the 50-day moving average, the support levels on the chart, and also you kind of look at the technicals, like short percentage, how many people are short, and then when these announcements happen and how it squeezes shorts, and that's the reason why you have these huge moves that happen in March 14, like everything kind of starts to make sense. So it takes a while to understand this, because every single setup could be different. Every single stock has their own story to tell. Every single stock has their own story to tell. It's kind of important to know a little bit of background, at least have an idea. Some traders focus more just on straight technicals, because again, you cannot predict the future, and I agree with that. But it's also fun, and you also get a little bit of edge if you understand the news behind it as well. Because on this day, seeing the intraday chart and how Tesla moved, I know some traders were going on this little intraday flag on March 14, and again, the potential just by all these short sellers getting squeezed, it's a reason to get in. So knowing the background could be an edge. That's just my thing. That's what I think, and I know some traders do take advantage of it and understand that, because again, at the end of the day, in big money, institutions understand the trade, they understand the news better than everybody else, and as small traders, we're just here to take a little piece of that chunk, So hopefully you guys learned something from this trade, this Tesla trade, a very interesting trade, very important concepts to learn from this setup. So hope you guys liked it, and please click like, subscribe to my YouTube channel if you want to hear more, and we'll hear from me. You guys will hear from me soon. Thank you.